The Nifty is now up almost 85 odd points, up about half odd percent.
80 points on the Nifty, and the gains are really driven by the mid-cap space.
A nice long weekend. The markets, well, we started with a gain of around 100 points odd, and with around 60 minutes to go, they're still holding with those gains. I think the heartening fact today is the mid-cap index outperformance, sitting with a gain.
Markets virtually close to the high point of the day. A solid 130-point rally to begin the week with on the Nifty, with the Sensex gaining 380 points, the mid-caps outperforming. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 key headlines. I'm Reema Tendulkar, and these are the headlines for the day. Stock markets gained for the 6th straight day. Sensex and the Nifty end at 4-month highs. Shares on BSE have added more than 11 lakh crore by way of market capitalization since the start of August. A fresh bid from Mahindra for leadership in electric vehicles unveils plans to launch 5 electric SUVs by the end of 2024, signs a pact with Volkswagen for EV parts. Anand Mahindra tells CNBC TV18, we cannot hedge our bets, we have to go all in. KKR sells a 27% stake in Max Healthcare for over 9,000 crore rupees. Foreign investors like Government of Singapore Capital Group buy shares from KKR along with others. Max Healthcare Managing Director Abhay Soy says there will be no change in business strategy. UTI AMC jumps and Tata Mutual Fund likely eyeing a stake. HDFC AMC also soars after we learned from sources that Standard Life sold stake in the company via a block deal. Muthoot Finance takes a nosedive after loan growth dips, margins contract. DFM Foods gains on plans to delist from the exchanges, while Polo Tyres ends higher despite a mixed bag in Q1. And here's the lineup of what we have for you in store on our show. In Market Opinion, we have Rahul Chadha of Mirae Asset Global Investments and Dan Feynman of Credit Suisse. And the big voices on the show are HDFC Chairman Deepak Parekh, Anish Shah of Mahindra Group and Abhay Soy of Max Healthcare. All right, first up, the markets bulls remain in cruise control. The Sensex and the Nifty end with gains for the 6th straight day. In the last 6 days, shares in BSE have added a market capitalization of over 6 lakh crore rupees. In fact, since the start of August, more than 11 lakh crore rupees have been added to the market cap. Mid-caps managed to outperform the blue chips today. Sonia is here with the market action.
Well, thanks a lot for that. It was a very strong day for the markets today. The Nifty rose for the 6th straight day, clocking in a 4-month high. The Nifty reclaimed that 17,800 mark and is now less than 5% away from the 52-week high. In fact, the Sensex had a very strong run as well, almost 380 points in the green. The sector that led the way from the front was autos today. You had a demand uptake, new launches that got all the auto stocks very active. The Nifty Auto Index itself was up over 2%, while stocks like Eicher Motors, M&M, Bajaj Auto hit fresh 52-week highs today, and stocks like Maruti and Escorts rose about 3 to 9%. The other space that did quite well is insurance companies, where stocks like HDFC Life, SBI Life rallied quite a bit. You had HDFC AMC that surged 11% after a block deal of 6% equity. And among the top Nifty gainers today was also Adani Ports, where the stock went up 4% post its Q1 earnings. All in all, the bulls continue to be in absolute control of this market. The FIs have now bought almost 18,000 crores in the cash markets this month, and it has been a pretty stellar run.
Sonia, thank you very much for that. In Market Opinion, Rahul Chadha, the Chief Investment Officer at Mirae Asset Global Investments, said that he was cautious in the Indian markets for now. On metals, he expects to see a 20 to 30% downside if growth slows down. Listen in.
Our expectations from here would be still cautious. Look, what happens is the monetary policy works with a lag. So we'll see impact of Fed's tightening cycle come through in coming quarters. Fed is going to hike even from here, 50 bips again in September, and the subsequent policies is easily expected. Balance sheet contractions starts now. In India also, we've seen RBI raise rates in recent past. So things are going to be slow from here. So I would not be in a hurry to buy. I think there would be good pullbacks, which would be good entry points to add. I think metals, clearly, if the growth slows down, the names can see another 20-30% downside. But one would be looking to buy, again, leading companies like Hindalco, Tata Steel over there. The balance sheets have significantly improved. They kind of are well integrated in terms of the raw materials, etc. Incremental supply additions are very limited. So I think these are the names one would look to buy, but you look to buy them 20-30% lower at 0.5, 0.7 times price to book.
In more opinion, Dan Feynman, co-head of equity strategy Asia Pacific at Credit Suisse, said that Indian markets needs more positive catalyst to rally from here on. He added that the recent buying spree by the FIs does not mean they're turning incrementally more bullish in India relative to the other markets. Listen in.
It's harder for India to continue running unless we get more positive catalysts. The problem right now is, number one, valuations. India was already quite expensive relative to peers before this recent rally began, and now it's even more expensive. Secondly, the EPS momentum is actually starting to ease a bit. India's been seeing strong upgrades over most of the past year, but that's starting to slow right now. So what we need to move forward would be more falls in oil prices and further easing of the pressure on interest rates and inflation. Foreign investors, foreign institutions have been buying equities in general. It's not just India where people have been buying. They've been buying in other markets in Asia, other emerging market regions, and they've been buying in developed markets as well. So I wouldn't say that the fact that you're seeing net buying in India means that they are turning more positive on India relative to other places globally.
Okay, let's get you the second headline now. The Mahindra Group has stepped up its electric vehicle plans. The company has announced its plans to launch 5 electric SUVs by the end of 2024 and struck a deal with Volkswagen for EV parts. CNBC-TV18's Parikshit Luthra reports from Oxfordshire in United Kingdom, where the Mahindra Group made the big announcements.
The electric vehicle passenger car market is heating up in India. Tata Motors has the pole position, and the Mahindra Group is now laying out aggressive plans to win the EV market. Here in Oxfordshire, at the company's Advanced Design Studio, Mahindra unveiled 5 new electric vehicles to be launched between 2024 and 2026. The first of the lot, the XUV E8, will be launched by December 2024. They also elaborated on a close partnership with Volkswagen. Let's listen in to Mahindra Group Chairman Anand Mahindra.
But you know, today I'm going to be a man of few words because it's all about the heart today. It's not about the mind. You saw that we have created a genre of design called hardcore design. So I'm speaking from the heart. I want to thank the team here, Rajesh, Velu, Pratap, Vijay, who unfortunately couldn't be here, but I want to thank all of them from the bottom of my heart. What they've done on our 75th anniversary is making me so proud. There's a flag fluttering in here, gracefully in the breeze.
And how would you compare this moment to the launch of the Scorpio?
You know,
and what does this mean for the company now?
Mahindra has always been in the business of taking people. We're a small company relative to the larger company. So we cannot hedge our bets. We have to go all in and out. So what you've seen is actually kind of warp into a new galaxy. We're moving at warp speed, we're going to enter a new galaxy.
With us right now is the Managing Director of the Mahindra Group, Anish Shah. Mr. Shah, thank you very much for joining us. 5 new cars. What does this mean for Mahindra's automobile journey? Is the future all electric? Are all future investments going into EVs only?
So the first step in our journey, Parikshit, is ensuring that we have leadership in EV. We've been talking about that for some time. We've said, wait for August 15th, we will do the reveal. And here we have 5 new SUVs. If you just take a look at the range, these are very exciting vehicles. And I'm sure that there's going to be a lot for our consumers for everything they want in SUVs. In terms of where we go forward from here, I think a lot will depend on how infrastructure builds out in India. I have no doubt that consumers will prefer these cars, even though we've got some really nice cars on the ICE side. But as infrastructure builds up, we'll see a greater inflection point for EVs taking off. So the next 3 or 4 years will decide whether we go faster on electric or we do a combination of both.
In more corporate news, KKR has sold its entire 27% stake in hospital chain Max Healthcare for over 9,000 crore rupees through block deals, which took place early in the morning. Foreign investors like Government of Singapore, the Capital Group, have purchased shares from KKR along with others. Following this, the co-promoter's exit, Max Healthcare's managing director Abhay Soy said there will be no change in the business strategy. The stock ended with a gain of 10%.
This is the largest sell down by a private equity fund in a secondary market, both in value and in percentage volume, as well as the fastest ever within 2 years of listing. So, it's a huge endorsement for not only the company that we manage, but more importantly, the resilience and the depth of the Indian capital markets, because to do a sell down of 9,200, which is crores, and for it to be absorbed overnight by the capital markets, it's a huge sort of endorsement for our resilience. We enjoy the credibility of being very high on governance, and the markets reward us for that as well by the higher multiples that we achieve. So we intend to sort of continue walking down that track. So it doesn't change our strategy at all. For now, we're just happy to have attracted, very, very good investors in the form of the Government of Singapore through GIC Capital Group, which is a $3 trillion group, and, the best of marquee investors through the sell down. Well, as a part of our shareholders agreement, they will be stepping down from the board seats, and we will be nominating other non-independent, non-executive members as whole-time directors. These need to be non-independent because you need 1/3 to retire, in rotation. So you need at least 3 of them. So I think, KKR has not been involved in the management part of it, because I think from the very beginning, they've been clear that if they could manage better, then, that would be, contrary to what the LPs think. They partner with promoters and with people they believe who they can depend on to deliver that, which they've done. So they've been very supportive.
Time for a short break, but stay tuned. Don't go anywhere. We'll be back in a jiffy with the other headlines. Welcome back. You're still with us on Markets Today. Now let's go over through the rest of the headlines that we're tracking for you. The fourth headline is, we learn from sources that Tata Asset Management Company is set to acquire a significant stake in UTI Mutual Fund. As of March end, Tata AMC and UTI Mutual Fund have assets under management worth 85,000 crore and over 1.6 lakh crore rupees respectively. Once the deal is through, it would make the combined entity the 6th largest asset management company. Let's now move on to a CNBC-TV18 exclusive. We learned from sources that Standard Life is likely to have sold 1.3 crore shares of HDFC AMC in a block deal. The stock ended with a gain of 12%. Yash is here with the details. Yash?
Well, HDFC AMC was a stock which saw a strong run-up in today's trading session, and that strong run-up was largely on the back of that block deal which took place today morning in HDFC AMC. Sources tell CNBC-TV18 that Standard Life, which is the foreign partner to HDFC AMC, is likely to have sold about 1.3 crore shares, which translates to about 6% equity in HDFC AMC. Now, this particular block deal happened at an average price of 1,950 rupees per share, and Standard Life is likely to have raised approximately 2,527 crore rupees when it comes to sale of this 6% equity in HDFC AMC. On the buyer side, we've been given to understand that there were multiple funds, both domestic as well as foreign, who are likely to be the buyers in this particular block deal. Speaking about the residual stake of Standard Life as on June quarter held about 16% stake in HDFC AMC. They've sold 6% equity. They are still left with about 10% stake in the company, but the stock today took positives from the fact that a part of that selling overhang is now out of the way.
Thank you very much for that, Yash. The big newsmaker this evening, the chairman of HDFC, Deepak Parekh, says he's never been more bullish on India as he is today. Speaking exclusively to CNBC-TV18, Deepak Parekh said India has become a pivot for global growth and expects double-digit GDP growth over the next decade.
In my 50 years of working life in India, I have never been as optimistic about the future potential of our country as I am today. we have been saying this for a while, that the optimism around India's growth potential is well within our grasp. The pivot of future global growth has clearly shifted to Asia. And for India, one is seeing trends of transformation at a very large scale. We, as you know, are one of the largest countries in Asia if you take China out. So over the past 15 years, more than 300 million Indians have been lifted out of poverty. India's current per capita is around $2,300. So the gap seems large right now to attain developed country status. But we are talking 25 years from now. Again, if you look at it from another perspective, we are already contributing 14% of global growth. 14%, which is increasing year by year, and is already the second most important driver of global growth after China. And seeing what is happening in China, we will probably in the next few years be the highest growth country in the world. So we can very well aspire to a double-digit GDP growth path into the next decade.
Okay, this is the fifth headline now for the day. Muthoot Finance fell over 12% after the company saw its loan growth dip and the net interest margins come in at a 22-quarter low in Q1. Abhishek is here with the details.
Well, to begin with, it looks like the market is shifting in terms of gold financing from NBFCs to banks, as we covered in Fin Street. So for Muthoot Finance, the earnings are below estimates. Gold tonnage is down about close to 5% quarter on quarter. The net interest margin is at 22-quarter low of 12.2% when compared to 13.74% in the previous quarter. AUM growth is on the weaker side. YOY, it's the weakest growth in 17 quarters, coming in at 7.7%. And sequentially, it's the weakest in 25 quarters, wherein the AUM has declined by 2.3% quarter on quarter. Return ratios are also very poor in terms of, historical performance. ROA is the lowest in last 20 quarters, coming in at 5.6%, and ROE is the lowest in last 22 quarters, coming in at 17.5%. Both in terms of NII and PAT, they are below our poll, and their subsidiary, both the housing finance as well as the Belstar MFI, both saw massive deterioration in their asset quality as well. Back to you.
Abhishek, thank you very much for that. Another big mover today was DFM Foods, and this is a CNBC-TV18 News break confirmed. DFM Foods has announced that the company will delist from the exchanges. The stock soared 20%. Nisha is standing by with the details in this story. Nisha.
That's right. DFM Foods has not performed very well. In fact, after Advent International had bought this company in the year 2019 at 249 rupees 50 paise per share, the company has not given returns for the private equity owner of the company. And therefore, Advent International, in order to have more flexibility in terms of a big strategic overhaul to improve the performance, also to infuse more funds, give an exit to the equity shareholders, as well as also to reduce the compliance costs for the company as a listed entity, has taken this big call of delisting DFM Foods. And they have also specified that PAC, another probably fund of this particular firm, is going to act in concert in the delisting exercise, and it will be done through a reverse book building process once the floor price is fixed. So we broke this story earlier in March this year, and now it has been confirmed that DFM Foods is on the path to a delisting process.
Nisha, thank you very much for that. Another stock that we were tracking today was Polo Tyres. The stock gained 6%, though the earnings were a mixed bag. Sonia is here with the key highlights. Sonia.
So it was a mixed bag for Polo Tyres this quarter around. The revenue growth was very strong, in excess of 30%. And both the segments, Asia Pacific as well as the Europe region, had a good growth, especially the Asia Pacific region, which saw a 36% growth on the top line. However, the margin pressures definitely persist. The margins were down 70 basis points year on year, coming in at 11.6%. That's because of higher raw material costs, higher crude costs, rubber prices, which hit the margins this time around. However, the management does believe that perhaps the worst of the margin pressures now behind them. Overall, profit growth was almost 50%, and strong top-line growth is what kept the stock very active today.
Sonia, thank you for those highlights. Moving on, Fairfax-backed Godigit Insurance is ready to make its Dalal Street debut. Sources tell CNBC-TV18 the company is likely to file its draft red herring prospectus this week and will raise close to 5,000 crore rupees via a fresh issue and an offer for sale. Yash is here with the details. Yash.
Well, that is correct. Godigit General Insurance has filed its IPO DRHP with market regulator SEBI, and it's after 5 years that a general insurance company is planning to come out with its IPO. The last time it happened was in 2017 when New India Assurance as well as ICICI Lombard launched their IPOs, and after that it's straight 2022 when Godigit General Insurance is planning to do the same thing. As far as the IPO itself is concerned, it's a large issue. Sources tell us that the total size of Godigit's IPO could be around 5,000 crore rupees, out of which about 1,250 crore rupees would be fresh issue, which means those funds will come into the company, and the balance 3,750 crore rupees would be the offer for sale, the money that would be taken out by the selling shareholders. As far as valuations are concerned, sources tell us that the IPO is expected to value Godigit General Insurance at about 30,000 to 35,000 crore rupees. Compare that to some of the listed players. For ICICI Lombard, the market cap currently is about 62,750 crore rupees. For New India Assurance, the market cap is about 14,593 crore rupees. To that, Godigit will have a valuation of about 30 to 35,000 crore rupees.
Yash, thank you for those highlights. Moving on, Reliance Industries has emerged as the second largest private employer in the country, with a workforce exceeded by only tech giant TCS. Sonal is here standing by to give us more details.
Thanks a lot for that. Well, Reliance Industries has emerged as the second largest private employer as per the recent data. Now, the company has taken over IT major Infosys, TCS especially, and also majors like Coal India and SBI. So it's still below TCS as we speak. Total employee count stood at 3.42 lakh, and which is a growth of 45% if we compare it to March 2021. So just taking a look at some of the top companies and the IT sector that contributes the most to the list. Understandably so, right? And retail segment for the company is the real driver for the growth in employee number, with 2.15 lakh employees approximately at that number, followed by Jio at 83,000 and then followed by the parent Reliance Industries. Reliance Retail now accounts for 63% of the total workforce at the group. Quickly looking at how employee numbers, they have constantly been increasing for the company, even in a pandemic year. From 1.9 lakh employees somewhere around 2019 and continued by 2020, it has continuously been increasing, and now it stands at 3.42 lakh employees. That's the approximate number. Talking about female participation, that's a big focus for the company. In total, there are 63,167 women employees, and retail again is the biggest contributor here, which is followed by Jio and then the parent, that is Reliance Industries. Females as a percentage of total employees stand at 18.5%, which is largely in line with the industry. As you can see on your screen, since Reliance Industry is a conglomerate with diversified businesses catering to both manufacturing and retail sector.
Sonal, thank you very much for that. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.